Hey. Morning, everybody. What's going on? Um, yeah, so 9:15. And Jerome Powell testified yesterday. They backed him in a corner and said, hey, 12 times before, when the inflation was dropping, this is important, when inflation plummeted like 1% or more, 12 times in the past, that has led to higher unemployment by a factor of 2 generally. So like 1% inflation drop, you get 2% unemployment. Pop. If we do the math on how many Americans there are, we're looking at 350 million. So 1% is like 3 million people. All right. 2% is like 6 million. They were saying if you dropped your, the inflation target to the target, we would experience massive unemployment, up to 10%. I mean, 30 million people being unemployed. And it's all true. I mean, that's, and the thing they pretty much made Jerome Powell admit was that based on history, that is all true. So if they hit their inflation target, and they did it this year, that we would see mass, just based on history, we would see mass unemployment. Now, I don't think that's necessarily the true, like what the situation is right now, and I don't think that they're going to be able to tame inflation. Like that's just a different thing. So, of course, Jerome Powell was out there trying to say this time's different and blah, 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 blah. But it's not really any different, really. I mean, but the key thing is they're not going to be able to tame inflation. Looking at this, all trading involves a substantial risk of loss, past performance, not necessarily indicative of future results. This presentation, informational, educational fund, not a recommendation to buy or sell any financial instrument. If you desire that personal financial advice, hire and consult a financial advisor. But jumping over this chart right here, this is the interest rates. The Fed is always chasing the interest rates. All right. Everybody thinks the Fed is setting the interest rates. They're just chasing the market rate. I mean, look, we held steady with the Fed rate while the market rate had ramped up. And then they raised, and the market had ramped up. And they raised, and the market had ramped up. The market took a little pause. They raised, and they were aggressively raising because the market rate was aggressively raising ahead of them. And right now, they're in the ballpark of catching it. And the current rate sitting at 4.89. Their target rate is 4.5 to 4.75. The orange box right there. The next FOMC rate change coming up on March 21st, 22nd, somewhere in there. So right about, we're coming up on it. A couple of weeks away. All right. So that's something to keep in mind. This is coming up. It's on the horizon here. Every time in the past when the market rate has been eclipsed by the Fed rate, there's basically the week of the Fed rate, next FOMC coming up. If they decide to raise the rate above the market rate and the market doesn't suddenly, go higher, we're probably going to cause some sort of financial crisis, start a countdown. So typically we get this arc and then it comes down and catches the Fed rate. The market rate kind of arcs over. Back here during the GFC, the Great Financial Crisis, we caught it a few more times, and then we hiked above it right at the end there. They kind of held steady, and then the wheels came off. So just keep that in mind as he talks again today to another panel in Congress or Senate or whichever one it is today. Let's see, popping over here, we have Wednesday, Fed Powell testifying. Let's see, in the House Financial Committee today. So they'll probably grill him again, and it'll be a bunch of, as it was stated in Discord, a bunch of blowhards trying to get their point, their sound bites, so they can play them for their constituents while they back Jerome Powell into a corner. Yesterday, he was, J. Powell was definitely stressed as he was answering those questions. He was just kind of frustrated because they were making him say stuff he didn't want to say. So just keep it in mind. If you listen to the live stream again, we do have JOLTS job openings coming out at 10 a.m., basically the same time as the testimony gets started, or the panel gets underway for the Financial Committee. And the rest of the week, we have some unemployment. Non-farm employment and the unemployment rate. Get it spit out the right way. So those are coming up on Friday. Thursday looks a little devoid of anything fun, market moving. We do have unemployment claims, but that may or may not, they're expecting basically in line, looks like, is the estimate. So if we get a sudden spike in unemployment, that'll be like, whoa, what happened? But I don't think I think they're going to keep cooking the books to make that work. So gold, everybody wondered what happened to gold yesterday. It wasn't just the dollar popping. It was this news coming out that the Perth Mint has been accused of selling diluted gold to China. And we're just talking about the purity standards here. They sold like 100 metric tons of gold to Shanghai. And the Perth Mint has been stating that they had a 99.999, I don't know where the number is in here, a whole bunch of 9% pure, and they kind of lowered their standard to 99.99. And they did that on the hopes to save about $620,000 a year in the efforts that it takes to get to that extreme purity. So, I don't know. They were saying that the dropping their standard to 99.99 only left a minuscule amount of margin to be within, to be within the contract they have with Shanghai. Shanghai is alleging that all the gold they sold them was not to purity standards, and that represents like $8.7 billion worth of gold. And the key here is that the Perth Mint is the only mint in the world that is backed by a government. So the Australian government and the country of Australia at this point is on the hook to make this right. But the other little tidbit in here is that China has a law on the books preventing exporting of gold, so they can't send the gold back, or at this point they're not sending the gold back to Shanghai to get it verified back to Perth, They're not sending the gold back to Australia to get it verified that it didn't meet purity standards. So it's just like a he said, she said situation at this point. We'll see how this shakes out. So that was this story hit yesterday and caused some shake-up in the gold market. So, and then this one was funny. I saw this morning when I woke up. Why the recession is always 6 months away. If you're in Discord, I'll throw the link in there later. But it's just basically saying that as come the middle of the year, the recession will probably still be 6 months out. Come the end of the year, the recession may still be 6 months out, unless we get that interest rate inversion I'm talking about. So, all right, let's actually talk about what's moving today. That's the goal. That was a few news items that were out there hanging. So overnight, nothing. Like, we haven't really moved at all. Just a pause. So what we did, we came up, we met some resistance, we pulled back, basically a 618 retrace. If you look at it on S&P 500 chart right here, we did a 618 retrace. Now, if we can get any kind of positive momentum today, this is a measured bounce setup. One of my favorite fib retrace type setups, where we get a move up, a retrace to the 618, and then a bounce. Now, that bounce, the target on this specific move would be something like this, right up here around 133. 41.33. That would be the minimum upside target if we're going to get a bounce right in there. Now, this also corresponds to a 618. We could do a kind of a measured bounce setup to go lower too. So that's this blue line coming across here is the 618 4096. So we have this kind of zone right here built up, and I probably should color it red because it's kind of a danger zone. If we turn down in this zone right here, if we rally up and turn down there, it can lead to a push down into these lower levels that I've been talking about. So just be careful. And I don't know what that keeps popping up. So just be careful. We could see that pop up there, and it may take longer than a day, Sledge. Patrick. It might take longer than a day. It would be great to see it pop up like that in one day, but it may be out a few days like this. So don't get too overly excited. But we could see that rally up, and if it does that like 1, 2, 3, and then turn down, break back below this level right in here, back below the roadmap line, that can lead to a move lower. So I am watching this like a hawk. Come back to these morning sessions. I'll be on it every day, giving the update on where we are with this. If we can break out above this zone, though, right here, I expect extensions out to this 42.26 probably. Then we see a pullback and a move up ultimately into 4,300. The stars are kind of aligning that we could see that move up into 4,300, and then a 618 retrace of that whole move up right there from about where we are right here up to that 4,300. Probably retrace 618, so it puts us right back in this 4,000 area once again, and then we'll see where we can go. So just more sideways choppy action on the S&P for the next probably 2 months in through April, maybe May. Sorry, it's not the best news, but that's what we got right now. Now if we start breaking down support, I'll be all over it and give you some downside targets. But right now, I'm thinking we're going to hold support and move higher. It just fits with my bigger narrative, but it's going to take a while to work through this area right here. I knew it was some junk on the chart. I mean, we turned down here in August. We've turned down here in February. We've got to work through it. So look at the futures. Getting a little bit of green here right before the open. We've got about 3 minutes to go. NASDAQ. This one did not pull down to the 618, came up short, only hit the 50. This gives me a little more bullish bias on tech, especially if we can bounce here and go higher. That could be a big boon for the market right here. Tech catching back up. Tech got hit hard and has room to recover. Russell, I kind of got this feeling like we may see Russell extend down, grab that roadmap line and bounce, but right now, not so sure. It basically did a full retrace of that move up. Looks like it wants to reach down and touch that roadmap line on the daily. Dollar, just sitting at that resistance right now. Not really. Tried to push a little higher. I had an alert set up there. Didn't quite get my alert and just parked on that resistance. Remember, last time we got to this zone, we spiked up here and it got slammed down hard. Big down, big down. Pause for a couple days, big down, pause for a few more days, and push down into the ultimate low down here. So we can watch that for what might happen today. We see a big push down that possibly eclipses yesterday's big up. That can turbocharge the market to go higher. Could, doesn't have to. Looking at Tesla, a little pre-market weakness. Looks like it's testing that level. If we can hold that level, we could get a bounce. If we start breaking below, say 180, watch out for this 618 retrace. That would be a measured bounce set up on Tesla. Been looking for it to test that support line fully. It came up a little short 3 or 4 days back, so watch that one again. Apple looks like pre-market pop, breaking above this little zone right up here, above 158. That's what to watch. We get above that. 199 is like my target on the upside. XRP making the stock twits. We're just about at the market open here. Getting a nice pop today, but still stuck at the roadmap line. Nothing to do for me. SHIB getting a little pop off the lows, but stuck below the roadmap line. And SHIB, even though they've been burning SHIB like crazy and it's making the news, SHIB has the potential setup to just go lower. HKD, getting a little pop. The market's open now, but I mean, from where it came from, that's nothing. Crowd, nice little pop, but we've got resistance at the roadmap line. Vion, looks like retracing a little bit. I grabbed a lot of these off of stock twits here. WW, nice big pop. The news was that they are going to buy a company so they can prescribe Ozempic or whatever, Ozempic. I don't know, however you say that thing. Popular weight loss drug, and that can be super positive. But that is a major kind of change in the business of Weight Watchers. Instead of selling you advice and programs and meals, getting into prescribing drugs and getting kickbacks. I mean, that's putting themselves in a different business. So is this a turning point for Weight Watchers? I don't know. We'll see. Got a bunch of crap. Just look at the chart here. I mean, they popped up into that crap right there and rejected down today. Got to clear that to get on up, but then they have another zone. Get in the zone, auto zone. Another zone right up there. And this chart has been beaten down like crazy. So, that's rough. So, watch out there. Looks like, I mean, on the standardized earnings, they're losing money like crazy. So, that company can go out of business. I would be very careful there. Trying to chase that one long. But that like I said, that getting into a different business may be what turns the point for Weight Watchers. XM, Qualtrics for the day. Looks like we may get some weakness there. Trying to break out, but left a big gap open and hasn't retested the roadmap line yet. Caution. I mean, we can break out and go, but the odds are that we see a retrace before we can break out and go. HCDI pushing down to the lows, could bounce. That's a 1, 2, 3 triple bottom potential. A move up through these highs right around here, and then the roadmap line would be a turnaround for Harbor Custom Development. So UNFI, United Natural Foods, that looks like a sideways nothing. Just more sideways. That's not really gone anywhere for a long time. Rumble. Looks like it's on a path to go lower, despite any kind of positive action today. I mean, we could see a breakout, but that's just not looking so breakouty. And if we actually put it down here on this, ignore those two big spikes. Yeah, tried to break out, couldn't even get above, trying to break out. You know, the story here, above here, could get us on a positive go, but I don't know. Doesn't look great for Rumble. KBAO, that looks like he's going lower. Casey bought out all the local Pilot gas stations as Pilot Flying J went to travel centers only. Little pop, then right back to fill the gap. Looks like it's going to come right back to these lows. Can we hold support? There's the question. Looks like it wants to reach down to 202 right there for Casey's. Axion reaching up to get to targets right there. I wouldn't expect a ton more. Maybe 232, and then a potential pullback. So we had this pullback in here too. Yeah, somewhere around that 232, 235 would be the upside most, and then probably some sort of pullback that matches one of these other ones. So that would be what I would expect. Nope, didn't quite get that one far enough. Yeah, could stop right there because that pullback right there hit the 618. Could see a pullback and retest 204 on Axion. Maxion. And that one potentially working on a breakout here. I would set some alerts right up here. We get a breakout, that one can run higher, make an extension. DSEY, nice pop. Got resistance right up here. If you're chasing that one higher, I would watch out for a move up to there from 8 to 10. I mean, that's what is that, 25% almost? Not too bad. SWX, little pop, but still looks like that one's going to the garbage right there. Be careful. That's a downtrend if I've seen one lately. FRTX looks like it's dead down there, popping up to the roadmap line. That's danger to me. OXY rallying up. If it can get above this junk it's had in here, it's been working hard. Get out of this downtrend. Break above 67. That one can go. I mean, it's got lots of potential. Petroleum is getting kind of hit down with the dollar being a little strong the last couple of days. But like I said, if the dollar starts dropping, oil could be popping. And just keep it all in mind. Tankers, keep rocking. These keep showing up on the list here. Scorpio tankers, looking like it can get that extension up to 66. Nice little $4, $3.50 pop potential. ACGL, well, that's just like, that's going to get a pullback at some point. I would be careful there, chasing that one any higher. Looks like they make lots of money. That's positive. And then HNI, big drop. That could be the lowest low. Let's see if that hit the fib target for this pullback. Oh yeah, look at that. Bounced right off the 1272. That could be the bottom. Confirmation would be, or first thing I would look for was a break back above probably these levels right here. So we're at bottom, almost bottom. Break back up through that 27. We can rally at least up to this 30 area right up here, about $3 rally. One more quick thing before I go. Let's see, pull up. I did not pull this up ahead, so just give me 1 second here. Pull this over. So I talk about money being expensive right here. VC funds are seeing a mass extinction event for startups in 2023. Could make the financial crisis look quaint. This is on the radar. And these are going to be companies that aren't necessarily public, but it can cause bigger fallout. So SPACs are getting hit like crazy because money's expensive right now. That's a little snapshot off Silicon Valley HBO show. So 81% of early stage startups facing failure in 2023 because they have less than 12 months of capital left to keep going. And like I talk about, with interest rates higher, money is expensive, and the spigots have been shut off for funding. That's why I say a lot of these biotechs and stuff are dangerous. So be careful on stuff that doesn't make money. We may see a mass extinction event on companies like that that aren't making money. It's alleged that something like 80% of the companies out here that we see traded on the markets are zombie companies that are just servicing their debt. So with debt rates going up as they have to refinance, that puts them in a precarious place to go bust. So start watching those numbers down here. Watch for the good stuff. You know, the good stuff makes money. They don't have negatives in here. They don't have minus signs. So watch for the good stuff when you're putting your money at risk. This is the kind of environment where you got to watch that stuff. Why do I know this? Because when I first started trading, this kind of environment right here reminds me a lot of that, where we saw a lot of companies that went extinct, you know, just wiped the slate clean in the late 90s, early 2000s, because they didn't make money when money got expensive. So be careful out there. All right. That is going to be the morning show for now. We've got Jay Powell coming up at 10, about 20 minutes. So good luck out there. My bias for the day, not so sure. I'm looking for the pop, but also cautious on the drop. I mean, that would be, yesterday I was kind of coin flip. Today, I'm rooting for the pop. But if we get a drop and break below this low, we got to be prepared and watch out. So that's what I got for today. See you again tomorrow. Remember to subscribe, hit the bell for the notifications so you can get the alert. I'll try to get the time scheduled properly tomorrow. Thanks for coming, everybody, and I'll see you again tomorrow.